Hi, I'm John Kavanaugh from the SEC Small Business Advocacy Team. Thank you for joining us today to hear from our distinguished panel on how communities are building entrepreneurial ecosystems to support small businesses and their investors. For those who joined us for yesterday's discussion, welcome back. While I have your attention, I want to make clear that the views expressed today are the speaker's own and do not necessarily reflect those of the Commission, any of the commissioners, or any of our colleagues on the staff. In addition, nothing we share today is intended as legal advice. With that out of the way, let's get today's session started.
Good afternoon, everyone, and welcome to today's forum, day 2 of the forum. We're delighted that you're joining us today. We're going to just go ahead and get started. We have a lot to cover today, so to get us started today, we're going to be joined for opening remarks by Commissioner Carolyn Crenshaw. Commissioner Crenshaw, the floor is yours.
Welcome to day 2. This is a great event, and I want to thank the staff of the Office of the Advocate for Small Business Capital Formation for all the work that they have put in to make this happen. I also want to thank everyone who's taken time out of their normal and extremely busy schedules to participate in the annual Small Business Forum. We appreciate more than you know that you're here today. I look forward to the discussion, and I encourage participants to continue to engage with the Commission throughout the year and across all of our various regulatory processes. Time and schedules permitting, speak to as many of us at the Commission as you can. The more interactions and perspectives that we have as an agency with this community, the better. Recently, in one of those continuing dialogues, someone reminded me of the importance of disaggregating the term small business and recognizing that the term is a reference to a broad spectrum. A spectrum that includes businesses first launching operations, using personal savings and money from family and friends, thinking about accessing capital markets for the first time. It also includes companies that have been operating for decades with dozens of employees that rely primarily on revenue and focus on a specific locality or region. Pertinent issues, challenges, and opportunities for any small business, though, depend on where on that spectrum that they are. And earlier this year, I spoke about rethinking our safe harbor for registration exemptions to better calibrate them for use by small, medium, or early stage businesses, rather than unlimited use by the largest private companies that rival the size of many S&P 500 companies, or companies that no longer exist on the spectrum of small businesses. I, of course, welcome perspectives on this topic, and also encourage recommendations and discussions on how else we can improve access and inclusivity in financial markets. I am focused on how to get the most resources to the part of the spectrum where entrepreneurs, and particularly entrepreneurs that do not share the same background as those in Silicon Valley and Wall Street, are tapping into capital markets for the first time. What do those entrepreneurs need the most, and what role can the Commission play? As one of today's panelists detailed in a book, startup communities and entrepreneurial ecosystems are complex, nonlinear, and often unpredictable. Actors, including governments, within those communities and ecosystems must be adaptive. And part of the thesis is that complex systems, such as a startup community, must be driven from a bottom-up rather than a top-down approach. I agree with that entirely, and that is why events like this are so important, to give voice to those who are working at the grassroots. I firmly believe that engagement and refinement should be a core characteristic of Commission processes. Please come in and talk to us about your ideas and give us your thoughts about our ideas. I'm also glad that there will be discussion on Thursday about accessing the public markets. It's a conversation that needs to be had here and elsewhere. There are several ways to access the public markets, and to quote one of our panelists again, it's important to think about this question holistically. In that vein, I want to highlight the benefits of public markets to smaller reporting companies and their investors, given that a lot of time and ink is spent on the costs. Public markets provide transparency that increases investor confidence, price transparency, and liquidity. In addition to informational efficiencies, there's a baseline of comparability in public market disclosure requirements that investors can rely upon with a level of certainty and confidence, helping with capital raising from a broad pool of investors. Further, the SEC has implemented a scaled or tiered disclosure system to better tailor and adapt the benefits and costs where appropriate. So I look forward to Thursday's agenda as well, and I'd like to thank you one more time for your engagement, and I'll get out of the way so we can get going with today's important discussions, and I look forward to the dialogue. Thank you very much.
Thank you, Commissioner Crenshaw. We really appreciate your remarks. Well, now it's time to get to today's business. In a few minutes, I'm going to turn it over to my colleague, Courtney Hazley from our Small Business Advocacy team, who's going to be moderating today's fantastic panel discussion. But first, a few housekeeping matters. I'd like to start by giving the standard SEC disclaimers that the views that SEC staff expresses today are our own and may not represent the views of other staff, the commissioners, or the commission. Second, just like we did yesterday, we'd like to take a minute to learn a little bit about you. So just below me on the screen, you're going to see that there's a few polling questions, and we would love if you could take a few seconds to weigh in on those. Third, if you're new to our platform, I'd like to point out that there's a chat box. It should show up to the side of the video screen. That is where we would like for you to drop in any questions or comments you have for our panelists. We have definitely reserved some time at the end to try to get to those. And then the final housekeeping matter is to let you know that we've received a number of recommendations so far. But if you have additional policy recommendations to submit, please go ahead and drop those in the chat as well. At the end of today's session, we're going to open for voting. And that's going to show up in the same window below where right now you see the polling questions. And that's going to give you an opportunity to prioritize those recommendations. With respect to the voting on the recommendations, the voting is going to stay open until 7 p.m. Eastern time each day. We know that folks are busy, and we also know that there's participants in different time zones. In fact, just last week, we got a request from Kiyoshi in the Northern Mariana Islands. He wants to participate, but it's actually just after 3 a.m. there. So he's going to try to put in those votes on the recommendations after he wakes up. We're going to get recordings of the forum up on the platform page as well. And you'll be able, like I said, continue voting until 7 p.m. Eastern time each day through Thursday. So make sure you weigh in. Also, one thing that is new this year, if you want to vote on recommendations from day one, yesterday's recommendations, at the end of today's session, you can click on the agenda tab on the left of your screen and select the day one. That is going to actually bring up at the bottom of that page the recommendations that we received for day one. And even though we're on day two, you'll be able to also vote on day one recommendations. So with all those technical details out of the way, it's time to get things started. So I'm very happy to welcome Courtney to the screen. Courtney, the floor is all yours.
Thank you so much, Sebastian. It is my absolute pleasure to be moderating today's panel on building and supporting entrepreneurial ecosystems. It is a widely acknowledged fact that a thriving entrepreneurial ecosystem can contribute significantly to the economic growth, innovation, and development of a region. However, we should also recognize that not all entrepreneurs have equal access to the resources, networks, and opportunities that are so essential for their success. So with that in mind, today we've assembled an all-star panel of experts who will share their insights, experiences, and recommendations on how we can create and nurture more inclusive and supportive entrepreneurial ecosystems in various regions throughout the country. Ultimately, one of the goals we have for our forum this week, as Sebastian mentioned, is to introduce recommendations, including on ways to improve access to capital for all entrepreneurs, regardless of background and locations. All right, so enough from me. I'm excited to get started. I want to welcome our panelists. We have Betty Francisco, Ian Hathaway, and Brian Hollins. Thank you all so much for joining us. I'd love if you could, briefly introduce yourselves and give a quick description of the work that you do. Betty, why don't we start with you?
Great. Thanks so much. And it's a pleasure to be here, Courtney. Thanks for the invitation. I'm Betty Francisco. I'm the CEO of Boston Impact Initiative. We're an impact investment fund based here in Boston, and we're what we call a place-based integrated capital fund. So we focus on investing in entrepreneurs of color, specifically to close the racial wealth divide. And we use integrated capital, which we define as equity, debt, and grants, using all the financial tools in the toolbox to help shape capital transactions that help entrepreneurs meet their needs where they are and at the time and stage that they're raising money. And also integrated capital means the other aspects besides financial capital that entrepreneurs need to be successful. So that's knowledge, social, and political capital. It's the connections, the technical assistance, the mentors, and other ecosystem supports that we all know entrepreneurs need and make them more successful. And for us, impact is at the core of everything that we're doing. So our focus is also on building businesses that are providing good jobs in the community, paying livable wages, creating pathways for employee ownership and cooperative ownership, both in businesses, but also in real estate, and ultimately create a more just, inclusive economy and accelerate that just transition. So that's a bit about BII. We're also helping to bring all this knowledge to the field through our fund building cohort program. So we're training other emerging fund managers across the country to launch similar integrated capital funds that are focused on community investing. So I look forward to the conversation.
Thank you. Ian?
Yeah, hi. Thanks, Courtney, and to the SEC for inviting me today. It's exciting to be here alongside of my fellow panelists. So my name's Ian Hathaway. I'm a founder and general partner of an early stage venture capital fund called Far Out Ventures. We provide what we describe as a mentorship-driven approach to venture capital, reaching entrepreneurs in undercapitalized regions. What that means practically for us is that we don't just provide hands-on support for early stage entrepreneurs, often first-time founders, but we look for ways to help entrepreneurs regardless of whether we are personally going to invest in them. I anticipate that being a theme throughout this panel today. Before that, I was an executive at Techstars, which is one of the largest startup accelerators in the world, which is where a lot of this thinking around taking a hands-on mentorship-driven approach to helping entrepreneurs succeed regardless of where they live, where a lot of that came from and where that became embodied in me. I also wrote a book on startup communities, which is the theme of the panel today. So looking forward to sharing some of those insights throughout the discussion.
Great. Brian?
Awesome. Thanks for having me, Courtney. My name is Brian Hollins. I'm a founder and managing partner of an early stage venture capital firm, just like Ian, a firm called Collide Capital. We focus in three core buckets. We focus on enterprise software, we focus on supply chain software, and we have a thesis around Gen Z and the future of work. I've spent my entire career as an investor, so I was lucky enough to go to Stanford University for undergrad, and as a kid from a small town in Maryland, it really just opened my eyes to entrepreneurship and to technology and the power of what the innovation economy was doing for every business that I had sort of imagined. And so I've really have dedicated my career to becoming a good investor, but along the way have tried to make it easier for other people that look like myself or come from backgrounds like myself to do it as well. So I helped start an organization called Black VC. Black VC today is the largest Black investor ecosystem in the world, training people of color to get into the venture capital ecosystem. And my partner at Collide Capital built a company called Blavity, which is the largest Black media company in the world for millennials and Gen Z, reaches about 100 million people a month. And they built the largest Black tech conference in the world, which is called Afrotech. And so through this sort of ecosystem work that we've done, we've recognized that there's a lot of people building happy hours and building ecosystems and building communities and not enough people investing in them. And so we saw a unique opportunity for us to have access to really strong builders that came out of underrepresented ecosystems and start to deploy capital behind them, and then ultimately help them scale up and sort of enter future pools of capital. So excited to be here and talk about ecosystem.
Great. All right. Well, we'll get started. Thank you all again. You know, Brian, you mentioned that moving to California was eye-opening for you, being around Stanford, Silicon Valley. I think that is exactly what people think about when they think of entrepreneurial ecosystems. It's easy at first blush to see why these coastal hubs offer such fertile ground for startups, right? They've got experienced investors, wealthy investors. They have experienced entrepreneurs who can be great mentors for new founders. There's networks of universities that are already there and a really long history of support of successful startups. But there are, as we know, successful entrepreneurial ecosystems outside of these hubs as well. Some new and emerging, some already there and thriving. And Ian, you know, you mentioned at the beginning, Commissioner Ken Renshaw mentioned as well, you wrote a book on this. So I'd love to just start with you and hear your thoughts on kind of what are some of the necessary ingredients to a successful entrepreneurial ecosystem.
Yeah, happy to comment on that. And maybe I'll start with the end on that, which is the template that gets overused, which is about being the next Silicon Valley, right? Like you're not going to be the next Silicon Valley. Silicon Valley was a process of many, interactions over the course of decades that just cannot be replicated, right? It literally, Silicon Valley could not replicate itself. And even if it tried, it would fail, right? And so there was, a really important book that was written on this years ago by a professor at UC Berkeley named Annalise Saxenian, where she sort of studied the dichotomy between, Boston, the ecosystem in Boston, which was the prominent, tech hub coming out of World War II, versus Silicon Valley, which was actually very nascent. And she looked at all these different factors and found that really it was about the culture that was the differentiator. Why did Silicon Valley propel ahead while Boston sort of, lagged behind in the 80s and 90s? Of course, there's been a resurgence, but point being that, people often are focused on the wrong things. And so in my book, my co-author Brad Feld and I, we created a framework for this pretty early on in the book called the 7 Capitals, which is sort of what are the resources that are commonly utilized by entrepreneurs, startups that are building high growth businesses. It was really an afterthought. We spent the rest of the book talking about what we think are the most important things, like collaboration and trial and error and sort of the mindset that you take towards helping people around entrepreneurship. But these 7 capitals, we talk about, I would say 5 of them are more tangible, while 2 are more intangible. So intellectual capital, things like, technologies, ideas, innovation. Second is human capital, skills, knowledge, talent. Financial capital, which we talk about a lot, such as equity, debt financing, and by the way, revenue, is probably the most important form of financial capital that entrepreneurs should want. Some others like institutional capital, which is governance and markets, and physical capital, which is sort of geography, density, infrastructure. The final 2 of these, which we think are the most important, we call network capital, which is, connectivity, relationships, fluidity, and cultural capital, which are, norms, diversity, dynamism, and attitudes that really bring the whole thing together. So when people sort of, one of the great things that this writing a book has provided me is it's given me the chance to work with leaders and startup communities all around the United States and around the world. It's remarkable how common the problems are that are similar from one ecosystem to another, but dealing with them is both similar and different, right? So there are cultural norms in places that vary slightly from others. But what I think the fundamental thing we're trying to do here, that every startup community, regardless of your endowment of these tangible assets we talked about, regardless of whether you have a research university or large tech companies or deep-pocketed investors, you can improve the outcomes of entrepreneurs by being more collaborative, looking for ways to open your network to them or find ways to mentor them. So for me, what really is about moving the moving the barometer, I guess you could say, in any ecosystem is how can we be more helpful to entrepreneurs, right? And help them succeed with their businesses.
Great, thank you. And I really love what you said about the goal not being to replicate Silicon Valley, and every ecosystem is, unique and depends based on the kind of startup community that exists there and needing to be adaptive to those within the community. Betty and Brian, can you think of anything from your perspective that you would add to the special sauce that makes for a supportive entrepreneurial community?
Yeah, so something Ian mentioned, which, something we really do take for granted, it is this economics of relationships and acknowledging the interdependence of the different stakeholders that are part of an ecosystem. And, one example is in Massachusetts, where I am, based in Boston. During the pandemic, I started to connect with ecosystems I didn't even know existed, right? So I have grown up as a lawyer. My career was spent as a corporate lawyer doing a lot of venture and M&A work. And then as an angel investor, and even as an angel investor, my network started to become women investors, investing in women founded companies. So again, like a ecosystem into itself. And what I discovered is that, our focus is we think of startups and innovation, and we think of VC, the VC ecosystem, like that tech sector. And Boston, of course, has an amazing one, right? Very focused on tech, life sciences, biotech. But what I didn't appreciate is that there's also this whole community capital ecosystem, right? It's the CDFIs, the CDCs, the community loan funds like BII, and they also play together in a really different way. And these two often don't meet, right? There is no bridge between the community capital, the VC, unless people start to talk to each other and actually collaborate. So COVID did that, right? So during 2020, when mad scramble, right, for a lot of us in different ecosystems to support the most under-resourced, underserved businesses that were not getting access to that COVID relief, right? Weren't getting access to PPP loans or other grants. And so I stepped into this amazing ecosystem of community capital. And we were on the ground, this was like spring and summer of 2020, helping entrepreneurs apply for those grants, reaching out, connecting with each other, to the point where we were on calls in the day and in the night as a group of 60 plus capital providers, community investors, business support organizations, right? Like all coming together around one goal, getting more COVID relief to the most underserved businesses that didn't make it to that first PPP round of funding. What that did is it built this huge community of trust amongst these players. It led ultimately to the founding of a coalition called the Coalition for an Equitable Economy in Massachusetts. And its guiding principles are around supporting those that are really left out of our ecosystem. It's Black, Latino, Indigenous, Asian entrepreneurs, those that are really overlooked, founders and small businesses, and connecting them with the resources that we are very rich in. Like Massachusetts, like many ecosystems, has tons of resources for startups and small businesses, but they often don't reach, those that need it the most. And so we are becoming that bridge. We ended up publishing 2 reports around entrepreneurs of color, how to best support them. One is also called The Color of the Capital Gap, which identifies the capital access issue in Massachusetts for entrepreneurs of color. And then we're also working on communication. So how do we reach entrepreneurs, right? Because you can have all the resources you want. If they don't know what you're offering, right? They don't know where to go or how to access it, then you're missing the boat. So that's another work in progress of how do we communicate with each other. And then this coalition continues to grow. We have 3 different committees. One is a business support committee, a policy committee, and I'll talk about policy later, but also a capital access committee. So the other thing is we're sharing deals with each other. So when we know a company can't be funded by one of us alone, or it may not be the right fit for our fund, we share it with this larger group in order to ensure that no business goes without the funding that they need to be successful.
I love that. And I want, if I could, to pick up on where you left off with the capital providers and the multiple kinds of capital providers and the different niches they play within an ecosystem. And I want to pivot to Brian, actually. And I'd like to hear your perspective on the role that these different capital allocators can play in supporting and collaborating with startups. And I'm picking on you because I know, like many of the other panelists here, you've worn multiple hats. So I want to hear about your journey from big bank to small VC and kind of what you did as a capital allocator in those different roles.
Sure. I'll just give you a fun anecdote because it's kind of how I got started there. When I was I went to Stanford for undergrad, like I mentioned, and I think I was my junior year. I was in upper level economics class, and it was the first time I ever really learned about asset management, or portfolio management, or portfolio diversification, or just basically all these things that rich people do that my parents didn't need to do, because you need money in order to have like an asset allocation. We didn't have money. So I ended up really leaving Stanford focused on wanting to run the University of Maryland endowment. That was my goal, was to go home and sort of support the school. And so I started my career in asset management. And it really kind of opened my eyes to really just like, without sugarcoating it, how much money there is in the world. Like there's a lot of money in the world. And, I had a role at Goldman Sachs where, I was 22, 23 years old, and I was moving $100 million of bonds in a day, and no one was really checking it, and I think that when I was able to see that, it just gave me exposure and shifted my perspective in terms of my understanding of kind of what was possible. And then, really have spent the majority of my career trying to figure out creative ways to bring that capital to communities that I know don't have it. And so I think that's a little bit of what you're alluding to. Like I've always found ways to sort of tie my community to the plumbing of like a larger body of water, if you will. And so I think that there's a couple of things that I've seen in the last couple of years that make me excited. The first is just at the Fortune 500 level, the focus of some of those traditional companies that did not have any capital flowing into ecosystems like mine, so backing underrepresented managers, or what's called a co-investment strategy, so investing alongside those managers into companies that they could support. There's been a massive change in that ecosystem, and some people can say it's short term. Some, you can have your own opinion about it, but I think that that's one really exciting pocket of capital that's unlocking and being introduced to this ecosystem. And I'll shout out Goldman as one of those. I spent 7 years at Goldman Sachs and launched with GS and 10,000 small businesses, and the programs that they've built there in the last 10 years, and the capital, multiple billions of dollars that have gone into this, I think are powerful. And I can tell you, because I was there, Goldman really wasn't doing that much like that even 5 years ago. The second bucket I'd point to is the kind of foundation world. So Betty mentioned this a little bit, but just thinking about the grant work and the evolution of teams kind of working together as opposed to just kind of working in silos is something that I think is getting a lot stronger, and there's a ton more reception around it. And the third I would add, just because I'm one of them, is just the increase of emerging managers. So instead of waiting for capital to come from some rich white guy, it's coming from people that come from the ecosystems that you're building in. And for a very long time, that's been nearly impossible. It's still very hard. And there's a ton of things we won't go into on this call, but things around why it's so much harder for an emerging manager of color or an underrepresented manager to raise money than a traditional manager. And that will continue to make it harder for dollars to flow into these ecosystems. But that's a third bucket that I'm super excited about, because it is evolving, and it's going to make it easier for dollars to flow to those founders, because the allocators of that capital actually know where those founders exist.
Yeah, no, that's great. And that is encouraging. Ian and Betty, do you have anything you want to add to kind of the role of capital allocators, how they can better support and collaborate, or even, piling on to what Brian said about trends you're seeing, positive or negative?
Yeah, I mean, just So the way that we met was actually through a connection that someone made about co-investing, right, with Collide Capital. So I think that's where, we all have our pipeline strategies, right? How we find entrepreneurs. But I think that there's something to be said around when you're broadening your reach and really, looking beyond like your current network, even for fund managers like us, right? So one of the things that I think has happened is this siloing that you talked about. We are trying to break those, right? So there's a lot more collaboration that I see, but we're still siloed in terms of types of capital, right? We still have sort of the debt investors, which are more of the CDFIs, community lenders, even local banks. They play in one sector, and then you've got VC, right? Angels, VCs, and another, and there is silos there. And it takes people like us to be bridges, right? To say, let's reach out. Maybe there's opportunities for co-investing. Maybe there's opportunity to share deal flow. Or you have some technical assistance program that could be useful to some of our entrepreneurs, and then knowledge sharing as well. So I think it's a lot of outreach, intentional outreach, and it's constant, right? That just is part of this building of a very different entrepreneurial ecosystem where we're leveraging the expertise of players that are even beyond our current geography. So I just want to raise that up because I still feel like, the businesses that we're seeding in Boston and beyond some of them will eventually be venture backed. So we're priming them, right, for our VC friends. And so I think having that rope back to our VC community is really, really important. But oftentimes, VCs don't look to community capital as a relationship to be built. And I think that it's a really important one, actually.
Yeah, I mean, I agree with everything that was just said. Definitely want to go deeper on some of the things that Brian said about being blown away, about coming also from a small town, about how much money there is in the world and just being overwhelmed by that. I assume we'll get to that. But I think just to maybe add to this a little bit, we invest very early. Oftentimes it's a first-time founder with very little traction, a product, maybe some, a couple of customers, maybe less than that. This stage of investing is actually quite collaborative, I believe. The challenge, though, for us is that we are, as I mentioned in my introductory remarks, that we are focused on finding entrepreneurs from overlooked markets. And this is a relationship-based business, which means, getting on planes, showing up, not just once, but many times. And it's very challenging, right? I think, as opposed to maybe angel investing or other forms of capital formation, VCs are looking for signal. They can be somewhat risk averse, even though that's not a view that's commonly held. And so we're looking for knowledgeable local investors who can help us, sort of assess the opportunity or the backgrounds of those founders. And so it's a real challenge. It's something that my partners and I talk about all the time. It's something that we get pushed on by our actual investors, our limited partners, and prospective ones, which is, how do you do this? Like, how do you actually build co-investment networks at scale? It's a combination of technology and other factors, but really it's just good old fashioned, relationship building. And that's difficult. And I guess the last thing on that is that it's pretty, I was having this discussion today. This morning, my wife asked me, she said, where would be the easiest place for you to be successful in this job? And I said, well, I could probably live in Marin County outside of San Francisco, and I would never have to leave, right? That's where so much of the industry is located. It's not the approach that my firm and I want to take. So it's really not an option for us. But the question was, sort of what would be the easiest approach? And that was my answer. And so, but But you don't have to go very far down the list of sort of, if you aggregate, the number of startups or venture capital deployed, you don't have to go very far down the rankings list before you realize that there are not lots of, early capital providers in these geographies. It's like once you cross kind of like the top 5 threshold, it starts to become sparser than you would think. I think on a capital weighted basis, 60% of venture capital is in funds in the Bay Area, whereas 25% of venture-backed startups are in the Bay Area. So there's a real capital concentration issue there. And, as I said before, it's a matter of growing communities and building relationships across, a bunch of different geographies.
Yeah, thank you. I'm gonna harken back to what you kind of just mentioned and what you said at the outset, Ian, about the importance of network capital and cultural capital. Before I jump to that, though, I want to make a quick plug for submitting questions. So for everyone who's tuned in, if you have questions for our panelists, we invite you to write them into the chat so we can address them later on. We would love to involve you in the conversation. So yeah, you mentioned cultural capital amongst the two kinds of capital that are so important and like intangible, right? And they're going to differ from ecosystem to ecosystem. Zooming out on the discussion a bit, I think that there's a misconception that a flagship entrepreneurial ecosystem like Boston, where you are, Betty, or New York, Brian, for you, that they have it all figured out. And Betty, you mentioned early on that actually, you were surprised by like there are communities within that community that still need help connecting, or there are certain entrepreneurs that still aren't thriving, right? So more work still needs to be done to kind of add or grow the cultural capital and the network capital, even within the existing robust ecosystems. So I guess I'd ask to all of you generally, and we can break it apart a little bit more, but how do you do that? How do you promote this culture of innovation and create a more collaborative environment? How do you go about growing or changing the cultural capital that does or doesn't exist in the ecosystem you find yourself in? Betty, maybe if you're comfortable starting it off.
Sure. Yeah. Again, it seems like there's some fancy thing happening or going on. It's actually, what you're meant to, it's relationships, right? It's the relationship building process. And then also what you prioritize, right? So like during, the last 3 years where like I mentioned, there's been a lot more collaboration amongst capital providers and business support organizations. One is that this initiative that I mentioned, Coalition for an Equitable Economy, has at its core a focus on helping to address the racial wealth divide in Massachusetts, but also creating a more sustainable and inclusive economy, right? So like that's the bigger goal. And in order to do that, we know we have to focus on the underserved, under-resourced, underinvested in entrepreneurs and small businesses. And how do you do that? Like, so part of it has been that there's some regional areas that already have really robust ecosystems, but maybe not enough capital, right? There's a lot of interconnections and good, strong relationships, but they need more capital support. And we're regionalized here in that Boston is the center of the universe, right? So, but there's this whole other part of innovative activity happening in the western part of our state, in the northern part, which we call Merrimack Valley, and in our gateway cities. We're also like a hub for some of the clean energy technologies like solar and offshore wind, right? So how do we create more supports for those industries? So part of it is bringing in, and this is why I really love this coalition building work, because it merges policy with coalition and movement building, right? And this is where policy is really important, and having government leaders at the table as well. So part of why we've been able to bring more capital to support some of the small businesses in Massachusetts has been because of the relationships we built with the Economic Development Secretary, with the governor's office, right? And being able to be advocates for the needs we're seeing on the ground for businesses. So again, during COVID, massive need for COVID relief. Massachusetts actually became the state with the largest COVID grant program in the country. So almost $700 million went to small businesses. Almost half went to women and MBE's DBE businesses, designated businesses. So it really did reach, some of the businesses that needed it the most. The other thing is we're realizing that not all resources meet needs in the way they're structured, right? So in Mass, it's about 78% of businesses here are micro businesses with less than 250,000 in revenue per year and less than 5 employees. So their needs are really, really different. So now there's legislation, right, to create a micro business office to have different supports for those. And then to also go deeper, right, on supporting innovation. So some of you might know Treasury allocated another round through SSBCI, right? SSBCI funding was something that states could apply for to get more small business capital, right, into their states. So again, we helped to advocate for more capital to go to Mass Ventures, which is the state quasi for venture capital, so that they could invest in deep tech, but deep tech into diverse founded companies. And then also Mass Growth, which is the lending arm for small businesses, to do more loan guarantees and credit for small businesses so that so banks and other community capital could do more lending. And then Mass Development, which is sort of the gap filler for housing and other big economic development projects. So all of that, when we think of startups, we often think of tech, but there's so much more beyond, just tech. It's this entire ecosystem of economic activity that has to be funded. And we've identified areas of, where more capital needs to flow. The other is in our state, and maybe in New York and in California too, we're seeing this. There's a huge housing crisis. So we need more affordable housing, in our entire state. So there's a focus on helping businesses both develop more affordable housing, but also businesses to be able to acquire their own spaces so that they control where they're at, because there's also displacement on the business side where businesses are being pushed out, right, of where they are. And then lastly, developers of color, really important, right? Lots of developers of color coming to the table that want to create more affordable housing or more affordable commercial, and they need funding, especially for that early stage of development. So more resources are coming, but it's because of advocates constantly pushing, and relaying what is needed on the ground. And that's really what's differentiating now, that we haven't seen that level of advocacy in a collective way.
Great, because you just put into a real life example the quote that Commissioner Crenshaw set out at the beginning that she pulled from Ian's book, which was, actors in the system must be adaptive, right? Like that need for the system, all the different entrepreneurial ecosystems to be flexible and adaptive. I want to integrate some of the feedback that we've gotten from our audience at this point, because it's really in line with the conversation we're having. Based on our earlier poll, the biggest barrier to accessing capital, folks have said, is networks and connections to investors. And that's exactly what each of you has been saying. And it's been your experience. It's something that you said that is a differentiator in helping the ecosystems grow. I'd love to turn to you, Brian, and you, like Betty, have done a lot of work, and you alluded to it at the beginning in your intro, ways that you've been helping to build community and network in the areas that you touch. So maybe you can share your views on the importance of creating those collaborative environments and tell us a little bit more about what you've been doing there.
Yeah. I think the more time I spend watching, more successful people than me or people I look up to, like if you watch their sort of acceptance speeches, like very rarely are they talking about themselves. They're oftentimes talking about people who helped them get somewhere, or people that gave them a chance, or things that, I'm just like a firm believer that like most highly successful people have sort of a team-based approach and a team and a collaborative sort of way of carrying themselves, where, I think it's tricky to to be collaborative in one place and then turn it off in another. It feels a little inauthentic to me. Like, I think you either tend to open up doors and share resources with everyone around you, or you don't do it at all. That's kind of my approach. And so I think it's important to just acknowledge that, like, if you find yourself looking to identify communities that you can join, or ones that you want to grow in or be a part of, you should also come with an orientation of trying to help that community, as opposed to just asking how it can help you. And I think that when you find those communities, or if you ask yourself that before you join communities, you will oftentimes find yourself in better communities, simply because that community was just better aligned with what you wanted to do, or what you wanted to learn, or kind of how you wanted to grow. And so I think I've spent a lot of my career just being intentional on the communities that I join, and the ones that I try to help succeed, because we all have, both Ian and Betty have alluded to networks and resources. Like, we all have very limited networks and resources. You can't always ask everyone for favors. And so when you do, they need to be intentional and really be thought out. And I think that the more time that you spend building community and identifying cultures and communities that you care about, the more benefit you'll see, the more reward you'll reap, because you'll find yourself enjoying helping other people just as much as you enjoy when someone helps you. I think that's the power of a very collaborative community. So I've done that throughout my career. I've tried to do it in different places. Most of the work I've done is for the Black community in particular. And so I think about it as a horizontal layer, like, not just how do I help Black people that want to get into venture capital, but how do I help the entire ecosystem? So I do a lot of work with the Black undergraduate community. I do a lot of work with the Black young professional community. I do work to help train Black tech executives on how they can become angel investors. And so that's more of a top-down approach. So again, it just goes back to the fact that I do it pretty organically, pretty authentically. Like, if I see a resource that one of those groups should have, I'm going to give it to them freely and not worry about getting it back. And I think the more you can train yourself to find those ecosystems, the more just the better off you'll be, the better experience you'll have.
It's such a great perspective and inspiring work that you all have done. Ian, if I could turn to you and ask you to weigh in also on some of the challenges you've seen and experienced at the times you've been outside of the traditional VC hotspots.
Yeah, before I do that, I just kind of want to jump on to some of the things that Brian and Betty said. So, I think it's, I guess another way of framing the discussion was around being transactional versus being additive and relationship focused. Like, don't just show up and say, what can I get out of this? Like, you wouldn't build relationships in your own, physical community or family. You wouldn't show up to a prospective in-laws house and ask what they can do for you. You'd want to be providing something, right? And so the way I think about it, there's actually a really good framework that, my co-author and collaborator, Brad Feld, talks a lot about, called Give First, which is sort of having this really long-term lens and having a commitment to a community, whatever that is, or a cause, and saying, look, I'm going to spend the rest of my life contributing to this. When people in this community are doing better, I'm also doing better, right? I'm not approaching it with this kind of like ledger in mind. So I did a favor for you, now you owe me a favor. It's like exhausting. And so it's so much easier to just find ways, simple ways to help people, right? Whether it's giving them 5 minutes of your time for support, or connecting them to someone else, or being a leader, right? Just showing up and initiating things. And that improves everyone in that system that you care about, that community, and that benefits you. And just trusting that it's going to work out for you. It's just it's a much better approach to this work and just in life in general. To your point about your question, Courtney, about regions outside of Silicon Valley, or whatever the main hubs, it's where I spend almost all of my time. There's so much focused on the word capital. And in fact, I didn't talk about this, but the 7 capitals, that framework, was really an ode to the fact that everyone uses this term capital, and what they mean is financial capital, but there's actually other capitals, right? There are other things that require investment, a forward-looking mindset that provides value in the future, requires upgrades and maintenance, right? These are all capital-like qualities, and they're all important. And when I go to many of these, financial capital deficient regions, they think if only they can have that capital, that will solve all the problems. And it's almost never the case. I think about, the community that I came from. I grew up in a small town of 12,000 people in, Western Ohio. My father had no education, no networks, no wealth, but he had 30 patents to his name, right? He was a brilliant sort of savant-like inventor, but he was a failed entrepreneur. And one of the things that I wrote about in the book and actually took out, I don't share this publicly too often, but was this feeling of this thinking of, if everything were the same with my dad's, projects that he spent most of my life building, if the only thing that were different were that we lived in Palo Alto, California, instead of this small town in Ohio, how different would the outcome be if you change that one thing, right? And it's more than just financing to get that off the ground. We just didn't know what we didn't know, right? 20% of my graduating class went to any higher education at all, right? So it's much deeper than that. But I think, and it's not to minimize the importance of financial capital. Obviously, that's very important. And for some communities, that is the missing ingredient, like Betty said. But in general, it's all of these things. And so I think they're so deficient in many of these things that, you can't just take this one-off approach. It's really, you got to look at the whole system view in order to provide the suite of resources that the entrepreneurs need to succeed.
Yeah. Well, thank you very much, Ian, for sharing that story that you keep to your chest most of the time. I appreciate that. I want to kind of lob a more general question. It's the hard one to answer, and we've touched upon it in pieces already, but to the extent we can try to ensure or make better entrepreneurial ecosystems in terms of their inclusivity and help them be more supportive of founders from diverse backgrounds, diverse industries. Are there, is there any suggestions or wish lists that you all have? It's something you each have described as part of your mission statements, right? They're things you're already trying to do. But if you have anything you could add to, special sauce, things we should focus on, things we need to see more of, I would love to hear from you all on that.
Are you more speaking about how I like the advice that I would give to capital allocators on how they could be better?
Sure. It doesn't have to be capital allocators. It can speak to anyone at any level, at any part of the system. That's why it's such a hard, broad question.
No, it's a good question. Because there's a lot of different groups, and different groups have different incentives. Different incentives make you act for different reasons. I would say a guiding principle I've seen that I just appreciate more than I did in the past was exposure. So Brian Stevenson, I don't know if folks are familiar with Brian Stevenson, but he talks about proximity and just the notion that unless you are sort of in the ecosystem that you're talking about trying to do better in, you're not going to do anything about it. Hiring an HR team to help you with diversity, or building in a system so that 3% of everything has to be you're never really going to move the needle. And so I've seen some teams really take that type of work seriously. I'll shout out one of our investors in our fund, the University of California Endowment. There's a group called UC Regents, which is run by the CIO's name is Jagdeep Bachar. And about 2 years ago, he was frustrated with the lack of diverse managers that were on the University of California Endowment GP list. And he said, over the next 2 years, we're going to take 100 meetings with diverse managers, because I want to see if we really just don't see any that are high enough quality to be in here, or if we just have a problem with the system and the way that we identify managers that we make choices for. So I'm lucky to be one of those examples. It wasn't a publicly posted, I'm going to do 100 calls. It was just when things came inbound, his team knew to flag it, and they took more exposure. They took more meetings. They had more follow-ups. They did more references. And ultimately it landed myself and my partner. And a handful of other firms into their ecosystem. And so I think that exposure is a starting point, is what I'll call it. I think the work that Betty and Ian do will tell you the frustrations around the lack of capital that's moved into this world. But I tend to try to be at least a little glass half full and say that, if you can just start with filling your calendar with the people that are in these ecosystems, I'll bet you'll recognize that they're a lot smarter, a lot more talented than you gave them credit for, and you'll start to focus on it a little bit more. But you have to be exposed to it. It can't be someone on your analyst team or someone, that comes around every Black History Month. You need to go and do the work. That's what I'd say.
Yeah, and I'll double down on that in the context of diversity, and not, we think of diversity immediately as diversity of ethnicity or race. Of course, that's important. But I think in building ecosystems, ensuring that you have a diversity of voices of the different players in that ecosystem is really important, and that those players be diverse. We know that the VC ecosystem is not diverse, right? We're starting to make some dent, your fund, for example, Brian, is making a huge impact, but there's still very few and far between, right? And what we often leave out is, the small business owner voice. It tends to be, let's go to the successful entrepreneur and figure out what they want and need. And I think we need both, smaller companies, those that have failed, even what do they need? Why did they fail? How can we do better for them? So that's one. And then the other thing, in terms of the other players in our ecosystem, the business support organizations, those doing, accelerator programs, incubators, there's also a lack of diverse leadership, right? So how can we bring them to the table, encourage more, a lot of them are nonprofits. So how do we encourage more people of color to go into those kinds of jobs? I will say here in Massachusetts, a lot has changed. We see a lot more diversity, and I'm super proud of another initiative that I've been a part of called Amplify Latinx, which is focused on building economic and political power for Latinos in the Commonwealth. And one of the things is we help build an initiative for Latino entrepreneurs, right? So that one thing we saw is everybody was siloed. A lot of these businesses didn't even know they existed in the state. And so part of the effort is to help connect them so they'll do business with each other, but also connect them to the plethora of resources that are here for small businesses and entrepreneurs. So, just to raise up again, the connection that we can make, the introductions, us serving as role models and mentors is really important. And I spend probably half my time door opening, right? Connecting people. And it's that knowledge and social capital that is absolutely, a critical part in addition to financial capital. And I keep stressing the political capital part, right? Because you can make a lot of connections, but you also have to be relatively politically connected, right? To even be even more successful. And I will tell you, one example, we had a business opening last year. It's a circular economy company. They're a micro factory creating furniture out of chopsticks, recycled chopsticks. This entrepreneur was able to open within 3 months of getting her lease signed. And why? Really connected to the city of Boston, to permitting, licensing, was able to get in front of the right people in order to open quickly. And then those that don't have that, it can take a year, right? So it actually makes a huge difference to have government leaders, elected officials behind you and supporting you, and also where they have your ear in terms of what are the issues you're facing as a business owner so that they could be advocates for you.
Yeah, maybe just the last thing. I know we're up on time, so I'll go quickly. Just to kind of, maybe I'll make one comment about the capital allocators approach. That story that Brian mentioned from Cal Regents is really encouraging, because I feel like that's a great place to start. We need more diverse fund managers who come from the communities that we're trying to reach. Many moons ago, I did a bunch of research on this and found that diverse CEOs are no less successful than the venture-backed companies overall. The challenge was getting funding into those companies, and so the investors that were driving investment into diverse-led companies were people from those communities, no surprise. And so, I'm grateful that the discussion has opened wide the last few years on this. This is, front and center on a national stage, and that's great. We've made a lot of progress. We have a very long way to go. But one of the most straightforward ways to tackle this challenge is to do what I just said, which is, getting more fund managers from these communities with the capital they need to deploy in those markets.
Thank you all. I love what I'm hearing. I know that there is so much more you all could say on this important topic, but I'm mindful of the time, and so I do want to give us a little bit of time for audience Q&A. So I'm going to invite my colleague, Sebastian Gomez, back to help us do just that.
Thank you so much. I've been really enjoying this. And while I really enjoyed the Q&A portion, in part, I was hoping that the panel was not going to end because I was really enjoying this conversation. So thank you again for that. We received a number of questions. I did see, before I get to the questions, I saw that Faith jump in on the chat with a point about finders. The issue of finders is one that we often hear about. It's has been part of our recommendations to Congress and the Commission since this office started putting annual reports. There's a number of recommendations on finders. In 2020, the Commission proposed an order that was just a proposal. The Commission currently does not have finders on the regulatory flexibility list, which means it's not on the list of actions that the Commission is planning to take in the near term. But if you feel passionate about it, when we turn it to the recommendations and voting on those, by all means, please note that. I want to start with a question that we received on the chat. And Betty, you touched a little bit on this, but I wanted to follow up with it a little more. The question came from Ms. Owen. I'll apologize if I didn't pronounce the name properly. He was asking about FINRA-approved platforms that match underrepresented founders with potential investors. And not to put you on the spot of any particular platform, but more broadly, what are your suggestions, your tips for an underrepresented founder who's struggling to connect investors? I mean, I think the reason I want to start with this question is it closely ties to that question, that point that Faith made about finders. But practically today, what would you suggest for an entrepreneur who is saying, look, my networks don't include people in the country club, so how do I go about finding those investors? Brian, can I start with you, or Betty?
Betty, go ahead.
Yeah, I mean, in my world, so we're what we call, trust-based community investors. So we're actually seeking the entrepreneurs that don't have those networks, right? They're the most under-resourced. They don't have friends and family that can necessarily invest the capital they need. And part of what we have to bring to the table from a value add perspective is not just our own capital, but it's that other capital that we talked about, the knowledge and connections, is that we open the door, and I think all of us do this, for that entrepreneur to other investors. Our focus is on impact, right? So we're impact investors, so we're opening the door to other impact investors that these entrepreneurs would not have access to otherwise. So that's one, is to seek out, other forms of capital, alternative capital. So of course there's venture capital, but there's, CDCs and CDFIs that offer community-based capital. There's also angel investors in different ecosystems. Some focus on underrepresented founders, some focus on women. So it's actually doing a little bit of homework, right, around who is in your ecosystem that, you could connect to. I was originally I started angel investing through Pipeline Angels, which is focused on helping, women to become angel investors so that they will in turn create more capital for women entrepreneurs. So there's a number of, women-focused angel investing groups. There's others that are focused on diversity. There's Black VC that also has a number of angel investors, that are part of that community as well. So I would say is happy to also connect with me, and I'll offer all of you up to help open a door to where you can start to look for investors. There's also, I think in a lot of communities like here, we have something called the Capital Network, right? They focus specifically on connecting founders to capital. And it's the broad spectrum of capital from, community investment, crowdfunding alternatives to, straight up banking and VC. So it's seeking it out in terms of where you are. I don't know much about the fintech platforms and whether they're working well, because I certainly know we've never gotten a connection through those.
Brian? Thanks, Betty.
Yeah, sure. I can piggyback a little bit. I'm not sure my answer is the most friendly, but to be honest, I like the internet. I've never seen more lists of funds that back underrepresented managers or funds that focus on the earliest stage of investing. I mean, I think that there's 10 years ago, I agree with you. You kind of needed to be on Sand Hill Road to figure that stuff out. I know 10 funds that have open office hours where they're I think it requires doing your homework and being very specific about what you're trying to build, and recognizing that every venture capital firm doesn't back the same type of company. So if you want to build a McDonald's franchise, you shouldn't go to an enterprise software venture capital firm or vice versa. Or if you want to build something that's focused on founders in Nigeria, then you shouldn't go to a fund that only invests in the US and ask them why they're not interested. And so I think it requires doing homework, but I think that the internet is readily available in a way today that it wasn't even 2 or 3 years ago. And sure, you can use these platforms like AngelList or I think if you want to ultimately build something, you're going to have to do more homework than just what is available to get you off the ground anyways. And so in the process of doing that, you might as well go and explore all the different things that are out there that are focused on where you're focused. So again, it's just, I think that this question will never be solved entirely. Not every founder is going to get capital. Not every business is going to get matched to an investor. But I think that if you can really hone in on whatever it is that you're building and actually prove that you're building something, show that you've been working on it, show that there's material traction behind it, whether that's revenue or customers or even interest. It doesn't need to be anything that's sophisticated, but show that there's purpose and intention. And I think the internet is your friend.
And go ahead, Ian.
Yeah, I can add something to that. Agree with that 100%. And remember that you're building relationships with people, right? So, one of the things Brian said, another way of framing it is you need to really, you do your homework and really qualify your leads. Who are you targeting and why? And it's not just at the fund level, it's at the individual level, right? Who is investing in what? What are they excited about? You can find out this information, by hustling. And it's not just at the partner level, right? So where firms have associates and principals, those are the people with their nose to the ground. And those are the people you want to build relationships. Don't just come to them at the time that hey, I'm trying to raise capital the next, 60 days or so. Try to build that relationship as early as possible. Investors love, the way I'd frame it is, instead of dots, they want to see lines. Give them the opportunity to show that you can actually build something over time. Give them some kind of timeline to look at what you can do. And another practical tip is that so many early stage firms, there's so many now. Thankfully, there are these lists, there's Crunchbase, there's other resources where you can find who they are. A lot of them have public intake forms on their website. Mine does as well. So there are ways of getting in front of these people, but it's really important to qualify those leads at the individual level so you're not wasting time and you don't just fall into this black hole, and view it as the beginning of a long-term relationship, because that's the reality. Once you start raising capital, you're going to be continuing to do that for for most of your business, unfortunately. And that's kind of the right mindset to take to it.
Great tips from all three of you. Anyone in the audience who is madly trying to take notes of all this stuff, remember that we are recording this, so we'll have it available on our website afterwards, so you can go back and listen to the tips. I want to jump to another question. And Ian, you mentioned this as you're chatting earlier. The fact that you could probably count, which is this hand here, or is it right here, the total number of cities, regions that you would consider like the top ecosystems for raising capital right now. And one of the issues that we see often and hear often about is founders who are not located in those regions, and they have tapped out all of the local sources of capital for them, and they're ready to grow to the next level. And they ask, what should I do? Do I have to move? Or is there another option for me? What would you say to someone who's just located somewhere outside of those top 3-5 capital raising ecosystems and has tapped out all the capital they have locally?
Well, my entire worldview and approach is on the belief that they do not have to do that. Right now, maybe for some types of companies, it might be more helpful than others. So if you're doing, enterprise software, maybe being in the Bay Area would make sense because, your customer base would be where those large enterprises are located. I don't really know. One of the benefits of the COVID era is that people have gotten used to deal making, or at least the beginnings of relationship building virtually. I mean, look at this event, right? I mean, we funded companies we didn't meet in person because we couldn't. So it opens up a lot of possibility, but it's still the same thing. Like, you have to build relationships. That might mean getting on planes. Maybe you're fortunate enough to be in a place like Boston where the capital providers you're looking for, there are a sufficient number of them in that geography, and you can do that on a local basis. But look, my belief is that you do not have to do that. But you may have to raise from people who are located in other geographies. My belief is that you're still building relationships. The best way to do that is in person, but through this societal shift that we've gone through, accessing the beginnings of those conversations is actually easier than ever. In fact, we prefer to do first meetings with companies virtually because we have the software to actually do automated note taking, right? It's actually a better exercise for us. Of course, we like to meet companies eventually, but so yeah, that's my feeling. You don't have to. It might be helpful for you, but if you don't have those capital providers in your geography at the stage of investing, you're going to have to go and see those people.
Oh, Brian, I think you're muted.
I am. Thank you. I just wanted to add to it, like, unless you're raising $50 million, I tend to not believe that you don't have capital in your backyard. I tend to believe what you don't have is product investor fit, meaning you haven't found something to sell to the people that have money in that ecosystem that's appealing enough to them. And so I spend a lot of time with our founders thinking about the evolution of that thinking from the thing that you're selling to a seed stage investor is very different than the thing that you're selling to a Series C or a Series D investor. You're selling almost an entirely different vision. One is about scale, and an earlier one is about sort of ideation. And so I tell founders to really think a lot about like why your thing needs to exist. Is there any reason why no one else in the world could build the thing that you're building? And to the extent that you can get to that answer, you tend to get a little bit closer to the thing that you should be building. And oftentimes, if you can bring that differentiated thing to the pools of capital that are right in your backyard, they will likely be interested in it. And so that's the other thing I would add is really just try to get recognize that, I'll use Ian and myself as an example. As early stage managers, I see about 1,500 companies a year. So imagine yourself as one of those 1,500 where if I say no to you, you take it really personally. But the reality is that I'll say no to 1,470 of those people. And so you just need to figure out how to be inside that 30. And I think that the people in your backyard will be interested if you find a way to do that.
I love that. Betty, anything else to add on this? If not, I wanted to tee up what I'll call a lightning round question here, because I want to give people time to jump to the recommendations. But I just wanted to feel free to chime in on that, or if not, for all three of you, if there was one thing that you think the audience should walk away with from today's discussion, what would it be?
Well, I'll combine my last thought on the prior question and the lightning round. So it's, surround yourself with a community, of support, a community you value, a community that you want to help bolster and amplify it. And as an entrepreneur, for example, that community you might find with other entrepreneurs, like find a program to help build your company. I did a little stint as an entrepreneur, and I did an accelerator program which was invaluable, right, around both the supports it gave me to help get the business to the next level of launch, but also it was being around other entrepreneurs that understood the journey, because it's such a lonely journey. And I think it's important to have a network of support that way. There's so many accelerator programs, incubator programs out there almost in every community, and you can find them too in co-working spaces or other, business support organizations. So that's one, is participate in one, but also be part of shaping one. Give something of value that you have. It could be mentorship, it could be opening a door, buying or supporting those businesses, right, that are coming your way. And then just amplify them into the ecosystem, like put them on social media, talk about them, give them a voice.
Thank you, Betty. Brian?
Sure. Yeah, I mean, I think Betty hit the nail on the head around a lot of those topics. I'll use an anecdote to continue what she said, which is like, 5% of $100 million exit is a lot bigger than 100% of a $0 million exit. And I think we have a mindset that, like, when we come around a good idea, we need to like protect it and not let anyone touch it. And I'm the CEO and I need to run it, and my LinkedIn needs to say that it's mine. And building a company, building a firm, I don't care what you're building, entrepreneurship in general is very lonely. And so to the extent that you are frustrated at a desk job and you're just positive that you want to run your own schedule, I would just be very mindful of what you're signing up for and make sure that you have a group of people that you're actually very excited to see 16 hours a day, 6 days a week, because it's a very long kind of journey and long grind. And whether it's the community that you build around you, like what Betty said, or just the team you build around you, which is a little more of what I'm alluding to on a day-to-day basis. Building a company takes 7 to 10 years at minimum. And so just make sure that you surround it with people that you think are really smart and really capable, because otherwise it'll be a lot harder.
Ian, I would hate to be you, because you have to, you get the last word, but you get to follow after Betty and Brian, but it's all yours.
Well, look, like Brian said, like, just low ego. Ego is going to kill you in this world. So get rid of that as soon as possible. I mean, look, my big takeaway is from this discussion is that community is important. It can help you succeed. It will not guarantee your success, but it will improve the probability of success for sure. It will also make the journey more enjoyable, in my experience. There is no sort of magic recipe to building a community. It's very simple. Like, think about how you would build a community where you live, how you build a community, whether it's, dropping your children off at school or, some sport you play, whatever it is. It's just that's it. It's very simple. You show up, you find ways to be helpful, you treat people well. And that will improve the odds that you will succeed. And if that community that you're looking for doesn't exist, where you live or where you inhabit on the internet, create it. It's very simple. No one can stop you. And it only takes, one or a few of you to get it going, and you never know where it will go. And so that's my advice. Community matters. I think the smartest entrepreneurs understand that and spend significant energy investing in that.
Well, Betty, Brian, Ian, this was fantastic. Thank you so much for all your insights. We really appreciate it. Thank you, Courtney, for moderating the panel. That's all the time that we have for today. So I'm going to turn it over to my colleague, Sarah Kenyon, who's going to wrap us up. Thank you so much, all.
Hi, I'm Sarah Kenyon from the SEC Small Business Advocacy Team. I want to thank you for spending time with us today for our discussion about growing and supporting entrepreneurial ecosystems. I want to give a special thanks to our panelists for sharing their valuable insights with us. Join us tomorrow at 1 p.m. Eastern for a discussion about how smaller funds support small businesses and hear about their successes and challenges. We now invite you to review the policy recommendations that have been submitted and vote to prioritize the recommendations that are most important to you. You'll find those just below me on the event platform. Thank you for being part of the forum.